Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, as stocks are in the green to kick off the final quarter of 2022. Chris, I can't believe I'm saying that already, but it's so interesting. The headlines and what was trending over the weekend was so incredibly negative with potential European bank fallout, only to see, I don't know if you want to call it a squeeze, if you want to call it a recovery rally, whatever you want to call it. I guess the question is, what does it look like going forward from here?
That's a pretty good question. And, just look at the broader market, right? We've seen 3 quarters of lower lows. The market has been selling off dramatically, and it's been one theme after another with one hit after another. Remember, everything's dynamic. And when you look at certain items like inflation, you look at certain items like interest rate rising environment, you look at lesser liquidity in the equity markets, you look at rising bond yields, depression across that board, and of course you throw in the pandemic, the war, and supply chain issues, you're going to see a lot of folks who are going to be suffering, and that's what it is, and one leads to the next. So you go from the initial items that you see that you think of large cap names, earnings growth being squeezed, what's the right E for the P when you get there, when you're looking at tech, and then all of a sudden bond yields start rallying. And all of a sudden there's contagion there. And that's the fear that's out there. One item leads to the next on the contagion level. And that's where this market has been selling off on, is the fear items. And the Fed's not helping, right? Raising rates into an environment, even to potential of a recession. And with that, you're having a number of people who are going to be squeezed for liquidity. And what are they going to do? They're going to sell liquid assets, which is bonds, which are stocks, to shore themselves up. And that's what we've been seeing. September, the NDX was down over 10%. We're down over 32% for the year. And most indexes are looking very similar to that.
Yeah, Chris, it's so interesting. I was at a conference over the weekend, and the traders I was speaking with, 90% of their worries is all centered around what the Fed is doing and what's happening with rate hikes. It seemed as if inflation, geopolitics were sort of secondary to all that, but everything was focused around what the Fed is doing and what liquidity looks like. Earnings didn't even matter. Fed liquidity, there's only 2 things that they wanted to talk about. But let's take a look at your first chart here. And this is what the numbers indicate. Give us some fresh technical levels.
Right. So the bounce this morning is being credited to a number of different items. One thing is the ISM number that came out today, much weaker than expected at a 50, just above. What's interesting there is that there are a lot of tailwinds there, including the ISM employment index, which came in below 50, which shows contraction, which is potentially an indicator of what the Fed may be looking for when they're talking about jobs. And what they're looking for there is for a decrease in jobs. So this is maybe one item that they're looking on, that peak inflation idea that may give the markets a rally. Now, granted, we're looking at a dead cat bounce here. We made new lows, and everyone's grasping at straws. What's interesting is that we have the August non-farm payroll numbers coming out this September non-farm payroll numbers coming out this Friday. That'll give us a deeper dive in September. But if it's any indication what the ISM number was, it's very significant. So onto the chart. We broke short-term support last week at 11,300. That needed to hold. Obviously, it didn't. We made a new 52-week low in the index. And really what we're looking for here on a one-day bounce is for the index to hold the open. 11,059 is what we need to hold intraday. If that holds, we can slowly start to rebuild here. We need to fill the gap for only a couple of days ago from the close on the 28th to the open on the 29th. And that target that we're looking there, if we hold the support level, is 11,493. So support is 11,059, then 10,966. That's the 52-week low. Resistance is tight at 11,335 and 11,493. Also note the RSI starting to uptick a little bit. We've been bouncing above and below 30 last week. We're now to 37.
All right. And Chris, if we take a look at your final chart here, the constituents adding or detracting from performance in the Nasdaq 100.
Yeah, breadth is across the board. Really, almost every stock is up that carries weight within the index. Apple's up 3.5, Microsoft's up 3.5. That's adding nearly 90 points to the index. Tesla's down on deliverables, though it's off 8%. But remember, they're talking about deliverables, and most of the analysts out there are talking about it as a supply chain issue, not a demand issue. So there should be a blip in that. If that happens, we could probably see almost every stock in the index up today. Tesla not today, but we're still 95 up, 5 down.
All right. Appreciate the insight as always, Chris. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.